Hello out there to my Facebook friends, clients, and the like. It's Jonathan Bengal here. I forget the episode number, to be honest with you, but I'm coming to you live again from my home little studio, and I'm actually flying solo. Which is not unusual, but I digress. So I'm actually flying solo today because I want to talk about, believe it or not, the PPP update, which is the Paycheck Protection Program. I know it was hot sauce a few weeks ago. It's still kind of hot sauce. And no, let's not get confused that it's not a water sport. We all know what that is. And also, we're going to talk a little bit about the EIDL, which is the emergency injury disaster loan. And no, you cannot take a pill to fix that. So I just kind of want to just turn today's episode more into an educational moment. But before I do, I just want to remind you guys out there that you're watching my show and that the things that I advise you on is not actually advice. You still need to go out and seek a professional like myself, a tax planner, a tax attorney, or an IRS enrolled agent or a CPA to really continue to guide you on these matters as it relates to your individual life. And second but not least, I want you guys to all to remember one very important thing. And that is that I created Naked Tax Talk because I realized that we all need to just get naked, babies, and bear down to the naked truth about our lives. And how do we do that? Well, we do it through personal development, through business development, and ultimately through our financial development. And financial development houses the word taxes. So with that in mind, I just want people to let you know that you can participate, leaving your interviews comments at the bottom down below will allow me to interact with you guys interactively. Now, just to be open and raw with you, I'm managing this all by my lonesome self. So as comments come through, I will do my best to address your comments and whatnot. And this is really going to be trying to really honestly educate us on these various topics. I also want to do my best to make it as fun, as engaging as possible. And quite honestly, if there's something I do not know, just know I will say that because I'm not afraid to say that I do not know what I do not know. So with that and without much further ado, let's start talking about the PPP. So I'm just a little bit curious out there, how many of us have been successful in receiving either the PPP or the EIDL? Now, I'll share from a personal point of view, and that is when the two loan programs were coming out of the woodworks, I realized that even my own clients were going to start facing some of their own cash shortages. And so being a business owner, now just because people are accountants or lawyers or, they're website developers like James who's watching right now, or they're doggy creation companies like the person I'm interviewing tomorrow, or anything like this, the truth is that we are all entrepreneurs. We're all business owners. That is the ultimate truth. We are all entrepreneurs. Even if my tax practice, my talk show, it's all about entrepreneurship, which means that I'm entitled to the same very things that government pushes out, especially under the CARES Act, and now, of course, with all these new acts that are coming out of the show. So what I want to share is that I actually applied for both the EIDL and the PPP. And what I found is that the PPP was actually very complex in the sense that we had to calculate wages, we had to calculate healthcare benefits offered to employees, then the term of employee, independent contractor. The list just got really complicated. Let's just put it that way. And so I actually made some training videos on it that now I am offering in exchange for your email addresses. But I digress. And the other thing, too, is I also applied for the EIDL. Now, I did this back in March when all of this was unfolding. We're talking very, very late March, early April. And today I finally have the funding for the PPP, and I'm now waiting for final approval for the EIDL. And I'm very excited because I know that this money is needed not only for myself to keep me employed, but it's also necessary to keep my staff employed as well. And that's the whole purpose, is to keep our companies functioning. It's to keep our companies chugging along. And it's supposed to ultimately help us to offset some of the losses that we are going to experience from the loss of clients. Now, let me go on a little bit of a tangent, which is majority of taxpayers pay taxes based on something called income tax basis. Another way of putting it, not technically GAAP, which is a fancy word for general accounting acceptable principles. It essentially says that cash is defined as when I receive the money, so the money actually comes into my bank account, it's considered income. And when I actually swipe the credit card or write the check and it's cashed, we recognize the expense at that point. Now, when most taxpayers, this is how you function. You function on a cash basis in terms of filing your taxes. Now, why is this important? Because if we're losing our clients right now, if clients are calling us up and saying, yo, like, I just can't keep doing this, peace out. If you are on a cash basis and you've not sent them an invoice and they've not paid you, you do not have losses on your books. All you're seeing is a realized reduction of revenue coming in, which is revenue that's not coming in. So what I mean by that, as is to confuse you some more, essentially what I mean by that is you got the cash that came in normally because you've got clients that are paying you and they stopped paying you. That's it. Your amount you're going to report is capped out at exactly what you are going to end up telling the government what you earned for the year. Now, what's clear is that the PPP and the EIDL is not income. So when you start receiving your PPs and your Ps and your EIDLs and the ABC soups, it is not income to you. Okay, so I understand this. It is not income. So it's not supposed to increase your revenue, which is taxable to Uncle Sam and to potentially your state. Now, if you are on an accrual basis, I'm giving you some basic accounting education. On an accrual basis means that I recognize income when I sent the invoice to my client to pay it. That is what's defined as an accrual. So I write the invoice and I put it in the mail. According to the accrual basis, I am going to account for the revenue at the time that I wrote the invoice. Now, this is true of the expense side, which is I receive a bill. Let's say I receive a bill from Cox for this lovely internet that sometimes works. Okay. I receive the bill and I document it in my books. Okay. So if we're using a software like the ones that we like to use, it has the initials of QBO. We use that. We can actually record the expense. Okay. Even though we've not paid for it yet, because this is accrual basis. Now, why this is important is because if we're losing clients or they're not coming to us or whatever the case may be, and I've already billed them and I'm waiting to get paid and I'm on the accrual basis, you're going to account for that income in this year because it's seen as being earned even though you've not been paid. And so in the following year, in 2021, more than likely, you are going to tell the government, so remember all that money I reported that I said I was going to get? Nobody fucking paid me. So now what you get to do is create something called a bad debt expense, which will reduce your future earnings on the accrual basis. So I hope that was clear as mud. But that's how accounting works. You know, the truth is accountants are tricky motherfuckers because we know how to use the various ways in which we report the income coming in and the income going out. This is what our genius zone is all about. So with that being said, please be aware that these PPPs and the EIDLs are not considered income. And when you repay these back, by the way, because your PPP, you're going to start paying back, I believe it's in 2021. I could be wrong, but you're going to start paying that back in sometime. Let me double check this. Yeah, honestly, I don't remember, but I think it's in 2021 or 2022. The point is, when you start paying back this loan, unless it's forgiven, when you start paying it back, remember that the payment amount is not an expense. So for you peeps out there that are tracking your own books and you want to come have me do your tax returns next year, I better not see your payments listed as an expense, because the truth is that what you're paying back is you're paying back a liability. You're paying back the debt unless it's been forgiven. And even then, the only portion that you're going to reduce from your taxes, from your income as a business owner, is going to be the interest portion only. So take, for example, the PPP loan, all right? And you qualified for $10,000. That's what you qualified for. And Oops, you forgot to allocate it towards wages, towards housing, towards rent, towards utilities, towards interest on business debt. You forgot to do all that and you decided to use it for something else. You're on the hook now to repay it back at 1%, right? Over 2 years. The interest on that's about $102. That's all you're going to be able to deduct as an expense as it relates to your business, not the repayment portion. Okay. The second thing is if you take the EIDL, again, only the interest portion that you start paying back will be deductible as an expense, and the remainder is going to be applied towards the principal, which is not an expense. Now, one thing that I know I personally am starting to research is the question of, well, I get the PPP, and here's what I'm going to tell you business owners out there right now. When you start receiving your PPP, I would make sure that I journal, meaning it's accounting term for I record. I journal the amount I received as a loan. That's what you're going to have to initially do. Now, I don't want to say get into technology terms like debits and credits, but for my fellow experts out there, you know what I'm talking about. But essentially what you're going to do is you're going to record the money you receive as a debt, meaning I got to pay that back. And I suspect, I'm saying this now, April 29th, 2020, I'm saying this now, I suspect that come closer to the end of the year or when the note will start to be repaid, I suspect the banks are going to come back and say, yo. So you know how we sent you that PPP and we sent you the EIDL? Do you remember how we did that? Now you got to prove to us that you did use the funds for what we told you could use it for. So you see right now, all of us went out and got these loans because we're all in survival mode. We're all in panic mode, rightfully so. The next challenge that we're all going to face is prove it to me. Prove it to me that you spent the money that we told you could spend it to have it forgiven, meaning I don't have to pay it back. And here's the beautiful thing. It is not considered income. You see, here's a little fun tip, and just the tip. When debt is forgiven, all right, so classic example, I go and I rack up credit card debt because I do. And I, at the end of the day, realize like, oh shit, I'm maxed out. I can't pay it back. And I default on the credit card. Everyone's been there. I've been there in my early 20s, my college years. Who in the fuck knew about money? That certainly wasn't a trait that was given to me. No one taught me about it, except for my mom in a weird kind of way, which is because we grew up on just $500 a month. My mother always budgeted. I always saw her write down her main bills: rent, utilities, food, and then pot. Mom, I have to tell the world, yes, you did pot. You were functioning pothead, and that's okay. But the truth is, my mom had a little budget. And so that's what I actually picked up as a skill set, being an accountant actually from my mother, which was to actually create little budgets and go, okay, rent, utilities, on and on. So anyways, I digress. So you've got this loan that's coming to you. They're going to want you to prove it to them. They're going to want to see payroll documents. If you are an 1120S, fancy words for S corporation, if you are a C corporation, Form 1120, or if you're a partnership, Form 1065, or if you're an individual business owner, Schedule C, Form 1040, and you employed people, not yourself, under the Schedule C, or a partnership, that's different rules, but I digress. If you have employees, they're going to want payroll forms. So I'm going to give you some hints. The payroll forms they're going to look for is called a 941. Now, many of you right now already applied, and some of you are being bombarded by the request of the documents right now. Show us the 941s. Guess what? They're going to do that again. They're also going to want payroll registers again. So even though we offer in-house payroll for our monthly clients, I highly recommend that you go out and you honestly stop being penny pinchers. Go out there and invest in a payroll company that will help to put all this shit together. Because you know what it boils down to? Time. Let's be honest with each other right now. We all became business owners because we were sick and tired of people telling us when we could clock in, when people were telling us how to do our job, what we could think, how we dressed, aka I can show up on my show naked practically. Like, we got tired of all that bull. And so we really wanted the freedom aka time, to do the things that we really want to do. And I know in this COVID world right now, I'll tell you what I really want to do. What I really want to do is, and what I do is, I hop in my pool now because it's nice, 100 degrees here in Arizona, jumping in my pool, relaxing, have a martini. Oh, and by the way, I did pour some wine for the first time on my show in a coffee mug. And yes, I bought me a freaking coffee mug so I can start marketing it. Um, so I want to do this. This is the freedom. This is my choice. This is what I get to do as a business owner. And that's why we do it. So, anywho's blues, 941s, they're going to want those. Payroll registers, they're going to want that too. So, do me the favor and free up your time and invest in a payroll company to help you to get that started and going. And if you honestly don't know who to know or who to trust, I'm willing to give you guys referrals. I have plenty. Honestly, payroll reps are like lots of boyfriends. You just got to pick up the phone and dial one, and I'll get you guys hooked up. That's just how life works in business. Now, here's the other thing that they're probably going to want to know in the future, which is we want to see a set of books where you've told us where you spent the money, be it on wages. If you don't do it all to wages, then where did you spend it? Oh, I see. You paid it toward your rent for your corporate space. Oh, I see. You used it to pay your mortgage interest on your home because you have a home-based company. Oh, I see that you used it to pay utilities, the light, the electric, the cable, the internet. I see you used the money to pay for all that. They're going to want documentation. It's the big D. And no, I'm not talking about my junk. I'm talking about the big D, documentation. They're going to want you to prove it to them that this is how the money was spent. And I guarantee once we prove it to them, they're going to turn around, they're going to say, all's forgiven. Don't you worry about it. Because I don't know about you fools if you realize this, but when we got the PPP, some banks, I know mine actually did it no, mine did not do it this way, but some banks actually just deposited the money. And next thing you know, you woke up and you saw your PPP balance there. My bank, on the other hand, turned around and had me actually sign the PPP documents. So this is why I'm saying I'm under the suspicion that all the hype about this being a forgiven loan, it's going to be true. It is true. It's in the law. But they're going to want to prove. They're going to want you to prove it to them that you did use the money for what it was intended to do. Otherwise, it is not forgivable. Okay. So I'm just saying that that's just my caveat. That's my catch. That's my word of advice. So the street has it that you probably are going to have to prove it. And right now, if you're walking around without a set of records, I want you guys to do me the favor, okay? And I want you guys to text me. I'm going to put my text number, okay? And I want you to text the word "let's get naked," all one word. I'm bringing it up right now. Let's get naked, all one word. And I would like you to text me to 555-888. And when you do, well, I think right now we have it set. Because see, here's the thing, right? I do a lot of things on the back end myself, and I have some help here and there. But here's what I'll tell you. If you text "let's get naked" to 555-888, we'll get your information, and I'm going to send you something pretty badass. We're going to send you, believe it or not, an Excel sheet. Oh, so old school. But trust me, I have a lot of clients that are saying, like, I love it. It's helping us. It's an Excel sheet where you're going to be able to put in all of your expenses line by line per each month for tabs. And then it auto calculates at the year end as one beautiful financial statement. Nice and simple. This is for simple startups. These are people who don't have a lot of activity investing in programs like QBO, which retails at about 70 to $100 a month. You don't have the resource for that. This is a great alternative for you. And again, it's an Excel sheet, and you just put in your line items, and then you resend it over, and it creates a beautiful little worksheet. So if you text "let's get naked" to 555-888, I'll get you the worksheet for free. I'll gift it to you. Gifting it from my heart to your heart. Because here's the truth. I don't want any of us to get caught with our pants down unless we intend it to be. I don't want any of us to end up with our pants down and them saying, prove it to us that you spent the money this way. And at least this way, come the point of judgment from them, you're going to be able to stand up with confidence to know what the hell you're doing and talking about, and not panicking and not stressing about all of this information. You're going to be able to simply go get the documents that you want from your payroll company. You're going to be able to have this spreadsheet that you're going to have. Maybe you're going to hire people like me that will overview it to make sure it's going to look correct for you. And then you can present that to the banks. And then from there, they're going to go, yes, okay, now show us the receipts. That's the other one, right? That's part of the big D. If you notice, a D has two parts. It's got the D, and then it's got two things underneath it. And the two things underneath it is going to be your receipts and the documentation of it, right? So you're putting it down like, what did I spend the money on? So you're going to need to have receipts. I train my clients as much as I can to take this thing called a smartphone. We've all have it now. And what we do is you're going to take pictures with it. Becomes your virtual scanner. If that's how we still do things. I don't know. Nowadays with COVID, it's almost all digital. But the point is if you got paper, then you're just going to snap a shot of it. You're going to save it into a folder, and that's where it will reside. By the way, this is true of everything you do in business. Grab your damn phone, take a picture of it. Now you have a permanent record. You put it into a folder. If you're using Google Drive, you create a folder in Google Drive. You call it receipts for the year, and you stash it in there. Maybe you break it up even further into your utilities and so on and so forth. Let me tell you, just saying that out loud was a lot of work. It got me excited. Did you guys see that? Can you imagine how much work's going to go in to do all this? By the way, my firm offers a solution so you don't have to stress your asses out on how to gather all this stuff up. But I'm just saying, I want you guys to be protected. I want you guys to take the time, snap a photograph, save it. By the way, it's good technique in the event of an audit, by the way. Snap a picture. That's what I'm saying. They're going to want you to prove to them that you've used the money correctly. Now, I also was kind of caught off guard by the EIDL's languaging in the terms that I signed for my EIDL loan. And I posted on my Facebook page, my personal one. It's public. You can go look it up. And essentially, it says that we are not allowed to use the funds to rearrange debt, to refinance debt. Now, that's really important because, quite honestly, I know some of us were thinking about taking the EIDL and then going and then refinancing debt. Well, that's now, according to the terms I signed with my bank, not allowed. Now, again, I don't know if this is every bank or if it's a full EIDL, like the law says that. But this is what I found out recently from my case, from my bank. And if you're curious who the bank is, it's BBVA Compass. So they had me actually sign on the PPP and the EIDL. Okay, so I don't want you guys to get caught with your pants down. Take some time, take pictures, take some time to go invest in a payroll company if you have employees. And let's talk about that for a moment because people get confused. They're still confused, and you still may be confused. And guess what? There's nothing wrong with it. So let's identify this with this. Are you ready? First, let me take off my little texting. So what I'd like to share with you is that you have the terminology that's being kicked around. So you hear the word employee. So an employee is somebody that you've hired to do a job function for you. So you've actually vetted them. They've given you some forms like a W-9, lies. They gave you a W-4. They gave you a state form typically. They gave you I think it's an I-9 form. And you're taking all their information, right? Their personal information, their social security number, their date of births. You're finding out, you're actually telling them what you're going to pay them per hour to do the job. You're telling them where to do the job. Right now, we're home-based at this point. So you might say, listen, I'm going to make you work from home. So you've got to be on the clock between these hours and these hours. Like, quite honestly, my director, Paige, she's so freaking awesome. And she's mandated to work for me because she's my employee. Let's be real. And she's mandated to work from 9 a.m. to 5 p.m. And so we dictate what we want them to do for us. I want you to go to Starbucks and buy me a coffee because I'm lazy. Let's not get crazy. But we see that cute little joke in sitcoms, right, all the time, right? But the truth is what they're talking about is the big C. And no, I don't mean the offensive word. What I really mean is the word control. So I control. The moment I control you, I own you. No, just kidding. No, but the moment I control you, I dictate everything. And because of that, the government says, you know what? By the way, there's 26, I believe 26 tests of control that the IRS uses. And Arizona, because it follows IRS rules for the most part, determines how much control you have over a person to decide if they are independent or if they're an employee. But anywho's, the employee, man, you have total control over them. What does that mean? That means that I'm now giving them a paycheck. Maybe it's monthly, maybe it's bi-weekly, maybe it's weekly, and because I'm the employee and the employer, the business owner, the employer, I'm turning around and I'm withholding from their paycheck FICA tax, Social Security and Medicare, aka FICA. And I'm also withholding something called income tax, federal income tax, and state income tax if that's the state, and potentially local income tax if that's the state. So I, as the employer, am taking on the burden. I am becoming the trustee of my employees' money, and I'm going to submit that to the government on their behalf. That is what we call an employer-employee relationship. And then at the year end, I'm going to give them something called a W-2. So for those of us, like my first job was at the age of, well, technically a legally paying job. I was 16. I worked for Burger King. That was my first job, and I got a W-2. And I still got W-2s actually all the way up through 2015 because I was working for CPA firms on the side. I should say full-time, running my JB Financial as a side gig. And then when I became a teacher and taught for 4 years, I also still had my little side gig called JB Financial, and I still got a W-2. So the W-2 is the summary of the work, essentially in pay time, in terms of dollar value, that somebody worked for me. And so a W-2 is what I, the employee, tell the government. I give it to the government, and then they match it, and then we file our returns. Now, let's talk about something called an independent contractor. An independent contractor, in terms of the form, is identified easily by something called a 1099. Now, if life could not get more complex in our tax life, I want you guys to know that they've actually updated and they've changed and added more 1099 forms for the business owner to use to report and to disclose to the government that we paid somebody to do a job for us, not like an employee. So what I mean by this is, like, let's say, for example, I have a book editor, Dee Collins. She's my book editor. Shout out to you, Dee. And she's helping me with the final publication of my book. Yes, it's almost done. It's called The ABCs of Deductions, an Entrepreneur's Guide to Write-Offs. And we contracted. And so I'm going to issue her a 1099 at the end of this year for the value that we provided for each other. So essentially what I mean is I'm going to I'm going to issue a 1099 and report it to her and to the IRS. And I'm going to say, I paid this amount of dollars to this company or a person in order to do the job. Now, here's the thing. Independent is the key phrase here right now. Independent, okay? So an independent is in the word, meaning that I have complete autonomy over what I do. The liberation of freedom, so to speak. The biggest thing about our independence as Americans is that we're free from tyranny. We're free from kings. We're free from the people that try to squash our rights and make us into their subjects. That's independence. And an independent contractor is like that. No one is controlling them. They are not living by kings and queens. They are not, well, unless it's this queen, honey. But listen, they're not controlled by anybody. What I mean by that is this is how the relationship looks like. I wish I had somebody here and actually right now, because I would totally demonstrate this. Darn it. Okay, so I gotta use like some acting skills. Let's see if I have it. All right, so let's say, for example, like I said, I've hired Dee as my publisher. So I would say something to the effect of, okay, Dee, so here's what I need. I need someone to help me to edit my book. I need somebody to help me publish it. I need somebody to help spread the word so I can become a #1 Amazon seller. I need. These are my list of needs. Then she's going to say, absolutely, I can fulfill that need, that need, that need, that need, that need. And in order for me to fulfill all of those needs, here is what it's going to cost you. Here it is, buddies. And they propose a price. So as a business owner, I make a decision. I say, okay, I agree to the price to get the services fulfilled. And then inside the contract, because this is what protects our asses in anything and everything in business, people. I know. So you have a contract, and inside the contract, it's going to say, her company, at Success Creation Academy, is that what it is? Yes, Success Creation Academy. I think that's what it is. Uh-oh, D, if you're watching, correct me. She's going to say, we're going to do this need, this need, this need, and this need by such and such a date. And we're going to provide this, this, and this, and this. And it's going to tell you what they're going to do in what order at what time. Now, I can't be over here going, well, D, you know what? You better be on that phone every day at 9 a.m. talking to me. Well, I guess it's built into the contract, but I digress. And I can't force her when to do the job. I can't force her how to do the job. And better yet, I can't be giving her the materials to do the job. You know who you are. So I can't be providing her the computers. I can't be providing her the house. I can't be, you see, she has to be independent. So if you are independent of the person you're providing services for, and they have no control over you, babies, then you are what we call a business owner. So see, here's the thing: independent contractor, sole proprietor, that 1099er, all those words simply mean you are a business owner. Let that sink in for a moment. You are a business owner the moment you are a 1099er. Now, why is that important to you? Well, let me share this with you. Because in the eyes of the government, it loves entrepreneurship. Do you understand that Uncle Sam loves us as business owners? He freaking loves us. I'm not talking about the orange Cheeto. I'm talking about our government as a system loves and adores business owners. And so the moment I become an independent contractor, the moment I become a sole proprietor, the moment I become a 1099er, the moment I become the shareholder of my own corporation, the moment I become a partner in a partnership, I am deemed as having a business. Now, there are more tests that go into that because limitations do apply. But the most part, though, the moment you are independent and out there to strike your own gold, to strike your own destiny, your own legend through the creation of your business, it entitles you and unlocks a shit ton of legal deductions and write-offs that are entitled to you as a business owner. So that is what an independent contractor is. So I hope we have an understanding. And if you do, leave me a compliment or a comment. If you don't, let me know either, and I'll continue to try to clarify it. But I hope this clarifies it. If you are in business for yourself and you are working with other independent contractors to provide a service and you're not controlling them, then, my friends, you may very well be correct and be in an independent contractor situation. Now, why is this important? Because again, with the PPP and the EIDL, this is what I was asked this question several times, like let's say a lot of times, over the course of the last few weeks. And one of a very common question that I kept getting was, I'm self-employed and I think I'm an independent contractor. And I think like I file like a Schedule C. So here's what I'm going to tell you. Self-employment is the same thing as being an independent contractor, as the same thing as being a 1099er, as the same thing as being a sole proprietor or a general partner. And I say that hesitantly because I don't want to confuse the mud a little bit. Now, I get asked this question. So I'm self-employed. Self-employed to me in my mind triggers, you file a fancy form called the 1040. We all file one if you're a citizen or none. And we all file if you're a business owner in the United States and you are not any other entity. Then you file a Schedule C. It gets attached. Am I eligible for the PPP? Well, the answer is pretty much you're eligible if conditions apply to you. So here's one test you have to ask yourself. Was I in operation on February 15th, 2020? Was I legit in operation by then? If you were, you may be qualifying. The next thing is you're an individual, but you have something called self-employment income. Now, this is the interesting thing, right? So in accounting terms, accountants are notorious for this. We like to use this word called revenue. And revenue basically means income. That's what it legit means. And so when you're self-employed, we call it self-employment income. But the truth is, it's the same type term, it's revenue. And then you can have something called net earnings, which is a result of taking my total income, my total gross revenue, subtracting all of my business related expenses to equate to my net earnings. So if you had self-employment income, that's important. And your principal place of residence was in the United States, and you filed, or you will file. So I've been getting people going, I haven't filed my 2019 taxes yet. Oh my gosh. Oh my gosh. Remember, it's saying you have or you will file a 1040 Schedule C 2019. You see, remember earlier I had said I had a hunch they're going to want to verify this come towards the end of the year. I suspect that's why, because they know that at some point you are going to file those tax returns. Now, the second thing that I get all the time is, since I have no employees, how do I calculate the maximum amount I can borrow, and what documentation is required of this? Well, I want to share my screen with you, if I may, because why not? Educational moment. So let me share my screen, and I'm going to bring up my lovely little form. And everyone's familiar with this form, I think. If not, well, now you are. So this is called a 1040. And a 1040 boils down to an individual tax return. It's a summary of all of our individual tax life, my friends. You see, everything we do in life has a tax consequence, pros and cons. And we report this to Uncle Sam at the end of the year on this form called the 1040. And so you could see this is where he's going to want your name, he's going to want some information. I'm going to put my dependents, all that other lovely stuff. But then I go to another form called a Schedule C. Now, some of you are familiar with this form. Some of you are virgins and never have seen this. And I remember when I lost my virginity. Oh, such good times. Anyways, so the point is you got this thing called a Schedule C. And a Schedule C is the summary of your business's activities if you were a sole proprietor, an independent contractor that is not involved in a general partnership, that you've not told the government that I want to be an S corporation or a C corporation. So by default, you file something called a Schedule C, okay? A Schedule C as in cat. Now, notice the profit or loss from your business. Now, this is what they're talking about, self-employment income. Why they're not consistent, the hell if I know. Listen, I didn't get elected to office, but this is what they created, okay? Now, I was talking earlier to a friend of mine that we're going to post it as a sub video to some of the stuff I'm doing. And I talked about the line B right here. And I'm just going to highlight this right now. But that number is a number in which you identify what is your industry. What's your industry? And that's important because in my book, I talk about that your deductions are related to your industry. And that's important. So nonetheless, when you look down here further at the form, you will notice that I have something called gross receipts. By the way, it's always made me laugh because it's like, what's so gross about making money? But anyways, gross receipts, meaning it has not been tainted by the expenses. And so we put it here. We put in the number value. So if I put in 100,000 bones, okay, because I was that good. And let's say, for example, I had no expenses. I don't know why you wouldn't, but let's say you didn't have any expenses. What happens is that $100,000 funnels down and it lands right here. So it tells us right away, this is where we're going to find the $100,000 as income. And why am I using my mouse? I don't know. I should be using my pen. So then the next thing is we are going to scroll away. Oops, we're going to scroll. Okay, never mind. I got to use both. So down here, you'll also notice on the return that you have all these expenses, right? Ordinary and necessary in order to make money. And so then if you notice at the very bottom, when you tally them all up, which in my case is 0 because I was that crazy that I didn't spend any money on my business. I just took money in. I'm left what they call a profit, a tentative profit, meaning I made 100 G's. And for purposes of simplification of tonight's educational moment, I'm going to ignore the home office deduction. Hint, hint, the most commonly overlooked deduction on a Schedule C. Hint, hint. And so then I'm going to just ignore that. And so now I'm left with 100,000 bones. Okay. That is now becomes my self-employment income. So when the banks are asking for a self-employment income, they're asking you to submit the Schedule C and the 1040, right? They're asking for that because this is the number they're going to use to calculate your PPP qualifications and, dare I say, the EIDL as well. And so from there's a complicated formula. Well, I guess it's not that complicated. Why make things complicated? It basically says that I can take my self-employment income with lots and lots and lots of variations, honestly, and I can calculate what is my maximum amount that I can borrow. And so in this particular case, we look at what I can borrow, and if I am correct, I turn around and I take, let's see here, calculate the average monthly net profit amount. There we go. So here's what you do. Are you ready? Math. Ugh. I mean, I'll be honest with you guys. Math and I, we were not friends, okay? We were really bad friends. In fact, we were like acquaintances. And Math and I became best friends when I was in college, and I started taking accounting classes. And all of a sudden, I had to think in these terms called debits and credits. And all of a sudden, it made sense to me. Like math was like, oh, that's what that means. And for those of you who watch this and you want to show, well, I got a lot of cuss words and whatnot. But what I'm trying to say is the people who say, I'll never use algebra, that's a lie. Turns out you have to use algebra all the freaking time. So in this particular case, what we do, and I'm going to write it here on the form, and you could do this with your own form, print it out. I would take this number and I'm going to divide it by 12. Why I'm dividing by 12 is because this is the average earnings over 12 months. And so, quite honestly, again, I told you I'm not really best friends with math a whole bunch. I'm an accountant, honestly, and I play one on TV and I play one in real life, and I happen to be a real one, just saying. But just because you're an accountant doesn't mean I can add shit in my head. I still have to use a calculator. Can I get an amen from my fellow peers? So I'm going to take $100,000 and I'm going to divide that by 12 months, and it comes out to about 8,000. It comes out to $8,333 and some change. Here's a hint. Government always rounds up. So those of you who are paid attention in school are familiar with rounding. So anything 5 and above, 0.5 and above rounds up to the nearest dollar. Anything below rounds down to the nearest dollar. So we get about $8,333 on average for every month that we've been in this business. Okay. So next, this is important because the next step is we have to multiply this number, the 8,333 bones. We have to multiply that by, we have to multiply this. So I'm going to move this for demonstration purposes. So you get $8,333 per month. This is what the average is. And I'm going to multiply that times 2.5. That's the multiplying factor they're using. And so I'm going to take $8,333 and multiply that times 2.5. And I get approximately $20,833 is what I qualify for my PPP. So the banks right now are really good at actually calculating this for you. But if you wanted to do this yourself, you could. You take your net income number and you divide that by 12 to give you my average, multiply it by 2.5. Now, here's the dealio. It's one thing to provide them the Schedule C, but you're also going to need, hopefully, a 1099 MISC. That's like, for example, if you worked for me to provide a service, I would issue you a 1099 miscellaneous. If I did not pay you with a credit card, I paid you with cash or check. Needless to say, I issue you a 1099 miscellaneous, and that becomes proof that you were self-employed. Maybe you don't get one because you are operating using PayPal or some other credit card merchandise, and for whatever reason they didn't issue you a 1099-K, okay, to confuse you more. And so you can back it up by giving them invoices. So hopefully, again, if you're using a software, you're creating invoices, or maybe you're like in the olden school days where I know this is true. People still go to Staples or other companies like that, and they're actually buying 3 carbon copy invoices, and you're writing them out hand, or maybe you create an Excel sheet or a Word document. The point is that you're submitting invoices to clients, bank statements. Now, but JB, I commingle my funds. My business income gets dumped into my personal checking account. And then I pay for my business expenses and my personal expenses out of my personal account. You see, not only banks, but the IRS looks down on that. They actually judge you. There's one area in which I think I'm okay with being judged, is that the banks and the government do not like it when you commingle your funds and you put them together. So exactly like Cassandra is saying, Cassandra Sullivan, she's saying, yo, what's up? I just gave them my P&L from QuickBooks and we called it a day. Yes, Cassandra, because you're using a program like QuickBooks. Some people may not use a program like that. So this is just the way they back up. So my point about this is bank statements, commingling of funds. So here's going to be your challenge. If I may diverge, which you can't say no to me anyway because it's my show, but I digress. So in the event of an audit, they come in and they say, JB, actually, I'm not going to say it for me, and I do not wish that into my universe. Let's reverse it and say, Joe Schmo, we are going to audit. We're going to audit your office expenses. And so please prove to us you spent the money on office expenses. And so then you go and you get the receipts and you take the P&L, like what Cassandra mentioned, and you provide just that segment they're asking for, and you provide them just the proof of just what they're asking for. And it's the documents, and you're showing, look, here's what I claimed for business. And on the receipts, if it's not obvious, I might write it down what it was for, that kind of thing. Because you see, when people try to use their bank statements as proof that I'm an independent contractor, nobody believes you, okay? Nobody really believes you. There's an underlying sense of I don't trust you. And the reason for it is because even though it's common sense, even though it's not really common sense, you must separate your personal life from your business life. Now, you're like, but I'm not an LLC, I'm not an S, I'm not a C, like what the hell? This is what I would probably do. I'm just saying for me, and again, this isn't advice, but what I might do is I might go to my account, my bank, and open up a second checking account number. And I would have that thing tracked all over it with only business income, only business expenses coming out of it, because I'm going to have an easier time proving to them that this is my business. Now, some banks that I'm aware of, because I have clients that do this, will form a second checking account that's not an LLC or anything like that, and they will ask the bank to do it as a DBA. Check your states, by the way, about DBAs. But they usually will put it as a DBA and the name of the business. It doesn't have any legal protection for you, but it shows that you are separating personal from business, okay? So the bank statement, you're going to need to go through and prove, like, yeah, this is where I spent the money, and here's the receipt, here's my proof. So bank statements work if done correctly. And then they also say the book of record. Now, book of records is a fancy word for saying what Cassandra said, which is I just give them my P&L from QuickBooks. So QuickBooks is a book of records. That's actually what it is. So QuickBooks is actually a function of you inputting data, and the output, the result is you get these things called financial statements. Whether or not they're reliable, and Cassandra, this isn't for you per se, but whether or not they're reliable is a whole different ballgame for another night. But at least you're showing the banks that I'm doing everything in my power to truly separate myself from my business. So far we talked about calculating your SBA loan values. We talked about what documents they're going to need. And then I get this asked a question a lot. What amount of the loan qualifies for forgiveness? Now, remember, this is about the individual. This is about the independent contractor, the solopreneur, yada, yada. Okay, so this is really for Jews. What do you want that for you? Okay, so what I'm saying is that you need to make sure, okay, that you are understanding that this can be forgivable, but you have to prove it. So they didn't say it yet. It's just implied. Trust me on this, peeps. I'm saying it first here right now. So here's the thing. Here's how this is going to work. Okay. You're going to have to provide them at some point 8 weeks worth of your 2019 profit. So 8 weeks worth. So again, here's my profit, 100,000. I got to calculate the 8 weeks portion. Now, pop quiz. Anybody know how many weeks are in a year? Because honestly, I didn't even know that. Honestly, I will admit this until I became an accountant. So you're not alone, okay? But I'll give you a hint. It's 52 weeks in a year. Okay, so that's how many weeks are in a year. 52 weeks in a year. Yes, Facebook user, 50. That's how you come across. I don't know who you are, but that's how I see it. 52 weeks. So that is 52 weeks in a year. So they're going to want 8 weeks. Okay. So now what I'm going to do is, yes, James, you're right, 52. So now I have a new calculation, and I'm realizing I'm running out of space to draw on. So for purposes of this video, we'll scoot down into the spillover for more deductions on my business. And I'm going to carry down the data. So I'm going to carry down the 100,000. And I'm going to divide this number by 52 weeks, right? Because that will give me a weekly earnings. Yes, Cassandra, 52. And then I'm going to calculate that. So 100,000 divided by 52. And I'm going to get $1,923 and some change, okay, per week. This is what my weekly earnings is. Now I'm going to step and further calculate that and multiply that times 8 because they want 8 weeks worth. And I'm going to take the 1923 times 8, and I'm going to get $15,384. This is the portion that could potentially be forgiven. Okay, so for those of you that got this PPP and you were like, yay, now I got money, now what? Well, for your own purposes, it is not gross, Facebook user. It is net income. You may or may not have come in earlier in the show. I don't know. But early in the show, I said for demonstration purposes, I was going to pretend as if we had no expenses because I'm that awesome. And I only had $100,000 left over in net income. So yeah, so there you go. So that's what that is. So yeah, so I'm pretending I didn't have any expenses, and because I'm that awesome, and I have 100,000 in net income. So with that, I'm going to use the net income number, divide that by 52 to give me my weekly amount, 1923, multiply it times 8. I'm going to get my amount that is forgiven. Clinton, did you miss the 1065 and how to treat partner income for a PPP? No, you have not. But here's what I'm suspecting. Here's what I suspect to be true, because they're using the term self-employment income. So remember earlier in the show, for those of you that had been on for the past 52 minutes, I talked about partnerships just briefly. I briefly talked about the number 1065 was as a partnership. In general, okay, thank you, Clinton, because now I got to back up for a second. In general, when two people come to do business together, okay, two people, and they have not agreed to be treated any other way, by default, the IRS says, oh, you two came to do business together? Yum, yum. You guys are now legally married in the eyes of the IRS in terms of how you file your income taxes for your business. So with that being said, you're going to get two people coming together. And so then what happens is two people coming together kind of not technically, but kind of it's as if they're filing separate Schedule Cs, but they're not. They're filing it under a 1065. And then depending on the partnership agreement, which most people don't do in advance, so the government takes the position that it's 50-50, and then they split the income 50-50, and then that gets reported on your 1040 under a schedule called a K1. So Clinton, what I'm thinking is that when you see that K1, you'll see a line number that will say self-employment income. I'm suspecting that's going to be the same exact value that we're probably looking at here in this case. That's what I'm thinking. Again, I don't honestly know, but if you ask me, I think the 1065 with the net earnings is going to be similar to this calculation. But today's video is strictly designed only for self-employed individuals such as Schedule C filers on a 1040. So this is not about S corporations, not about C corporations, and interestingly enough, not about partnerships. But Clinton, since you brought it up, hey, teachable moment. That's what I used to do when I was a teacher for 4 years. I'd have a lesson planned out, and then a student would ask me a question, and then it became into a badass teachable moment. So I hope I provided that to many of you out there. And by the way, Clinton is adding comments, and Clinton's also another tax expert, so he's also responding. So Jared is asking a question: does the 75% minimum usage, is it only for payroll? I believe it is. I have to double check on that, honestly, because I don't remember from the top of my head, but I need to go check that up. But I believe so, and there's some rules around that as well. Does it matter if you had a loss last year? Great. Facebook user, can you please do me a favor? Can you just write your name, just your first name, just so I can stop calling you Facebook user? I just find it weird. I would love to have you tell me your name. Just your first name works. So essentially, that is interesting, right? Because yes, you can use 100% of it, Cassandra, for payroll. So when Miriam, okay, so Miriam, so if you had a loss last year, so this is very important, right? So if you were paying it, if you were here, no, you said you messed a little bit in the beginning. So let me back up, and some of us might need this just for a quick little refresher. If we come up here to the Schedule C on the return, you guys will notice that I brought down the gross income because that's what I did to make this simple. Actually, you know what, Miriam, this is what we're going to do. We're going to turn this into 2 segments. Let me deal with the profit, and then we'll talk about the loss. And I'll demonstrate that for you on this return so that you can see it and how it actually works. The short answer is no, but I'd like to explain the why, if you will allow me to explain the why. So I'm going to go back to the bottom of my overspill where I was writing my examples. And so yes, so essentially here we are again. So you guys are kind of curious, right? Because let's be real here. Do you guys know what we're doing right now? We are actually doing proactive tax planning. When I call myself a certified tax planner, a certified tax coach, I am basically telling you that I am a proactive tax planner. And this is what I do for my monthly clients. I calculate and figure out, especially as many of them start to tell me what their PPPs were, we are going to be able to then tell them, okay, so this amount will be forgiven. And then because we know that amount will be forgiven, we don't have to anticipate cash leaving your pocket to pay back the loan. So instead, as long as we allocate the loan portion for the appropriate things we can use it for, all shall be forgiven up to this value. So the value I calculated, again, take your net self-employment earnings, divide that by 52 weeks, equals, in this case, 1923 if I'm using 100,000, and then multiplying it times 8 weeks, and that's giving me my forgivable portions, okay? So believe it or not, this is what we're doing. I'm giving you a little bit of a sample of what JB does in his Genius Zone. And yes, my clients can attest that I teach in this manner too. So with that, that's how we kind of start beginning to figure out what is forgivable. Now, the next thing you're going to need to do is the next step is now, okay, great. Now I know the amount that's going to be forgiven. That's the beginning, okay? So the next thing about it is now it goes, okay, so I can allocate up to $15,384. This is on somebody who has a net earnings of $100,000. I can allocate that now towards payroll. That's employees, not independent contractors. Employees. I can allocate it towards my mortgages, the interest portion only. The interest portion only. So what I would recommend, and all of us have access to our mortgage statements today, I would go and I would look at those mortgage interest amounts. So let's say, for example, you pull it up and you see your mortgage interest every month is $300. I make a note of that because what I'm looking at now is that they're going to limit the mortgage interest to the amount that you would deduct on your Schedule C. So, with that being said, I'm going to shift gears a little bit and talk about something called mortgage interest. Now, remember I said the $15,000, keep this in mind, 15,384 is what I have potentially to be forgiven. I don't got to pay it back, right? I already emphasized they're going to want you to prove it down the road. So, what's going to happen is, do you remember earlier, for those of you that were on, I was giving you guys a hint for the most common deduction missed on a tax return. This is a freebie, by the way. I'm gifting you this knowledge right now, literally gifting this to you, because this number is amazing, because it will save you money in taxes overnight. Again, tax planning, this is what we do. So there's a common missed deduction on the tax return, and it's called a home office deduction, and we see it pop up right here. But if you actually read the Schedule C form, you can't just make this shit up, quite honestly. You have to actually go use another form. And so the other form that we attach is called an 8929. So that's fancy words, fancy letters, fancy numbers for the term expenses for the business use of your home. Again, I'm only talking to my Schedule C filers. Okay, my 1040s, my independent contractors. You could also be an LLC, a single member LLC. I want to clarify that right now. But I'm not talking to my partners. I'm not talking to S and to C Corps, okay? So there's a form here called an 8829. This is a fancy letters, fancy numbers, because you see, in my industry, we talk tax lingo, and we talk in terms of form numbers. So if I say 8829 to any of my staff, they know from a drop of a hat what it is I'm talking about. So a business home, your business home, is very valuable to you. You see, Uncle Sam recognizes that the majority of self-employed individuals operate from their homes. Why? Because quite honestly, it's a bitch to go get a corporate space. I know so, because I have one. And it's very expensive sometimes, and it can be a lot of cash outflow that many of us small business owners don't necessarily have access to. So Uncle Sam says, you know what? Because you are working out of your home, and your business, which is a separate entity unto itself from you, is taking up space in your house. And as a result of that, I want to make sure that you account for the square footage of the space that your office is taking up in your home. Okay? So it's very important, because when you set up a home office in your home, you must make sure that it does not look like a bedroom. You see, people get hung during an audit because the auditor, they will prove it to me it was a home office. It was a home office, not a bedroom. It wasn't just the guest bedroom that you had a teeny little desk in there. Prove it to us that it was an office. And I advise my clients to take pictures of their home offices, take pictures of where they're regularly set up, take pictures and document it. Pictures to have timestamps on it. Take photographs to prove that that is your office space. Take pictures of when you take documents that occupy a space in your home, like a closet, for example, because you keep paper files. Take a picture to prove that that's where the paper files, and there shouldn't be anything else in there. I shouldn't be seeing jackets. I shouldn't be seeing coats. I shouldn't be seeing the kids' ski jets. Well, I guess you put ski jets in the closet. You got a big ass closet, but I shouldn't be seeing any of that. I should just be seeing the file cabinet with the documents that are in there, because you're storing it, okay? So my point about this is that your home office needs to look like an office. Like if you came to JB Financial at my office here in Phoenix, it should look like that for the most part, okay? So why this is important? Because it's low-hanging fruit in an audit, that's why. And the second thing is notice that the form tells us an area that is regularly, so it's not like, oh, today I'm going to work in my home office, and then 5 days later, oh, I'm going to go work in my office again, and then, oh, 2 days later. No. Regular. Like when you go poop every morning, regular. So you got to be regularly using it, okay? Exclusively for business. So I better not see a sewing machine behind the office desk, unless you are in the business of sewing. I better not see a Nintendo. Well, I don't know who plays Nintendo anymore. I play a PlayStation, but I better not see a PlayStation attached to a TV in my office, in my quote unquote, my bedroom that's been converted to an office. Okay. So it's got to be exclusively for business. By the way, if I run a daycare in my home, now for some of us with COVID, that got ruined. But once COVID is lifted and things get back to a pseudo normal, whatever that means. For those of you that are the daycare industry, you know that your house is primarily occupied by kids. How you guys do it, I don't know, but hats off to you. So my thing is about daycare or inventory. So let me tell you a story. Story time. So I had a client that ran a very, very amazing company, still owns it, still runs it, still his accountant. And he found himself coming to my office going, JB. So what he does is he buys real-time inventory. So meaning that when a client orders a TV, let's say, or they order wiring or whatever, he orders it directly from the manufacturer, comes into his home, and then he takes it and installs it. So sometimes he'll get back ordered with projects. So he comes to me and he says, you won't believe it, but the boxes to all the shit that I've got to install, it's all taking up my living room, my kitchen, it's taking up the spare room, like wall to wall boxes. Like I kid you not. And so of course he took pictures of it because again, if inventory is taking over your home, Uncle Sam wants to reward you and allow you to deduct the cost of that inventory taking up space. So what that means, or product samples. So if you are an MLMer, by the way, highly audited, just saying, but if you're an MLMer, if you've got product samples, so I have a client, believe it or not, that also deals with a lot of product samples, and they store it in their home as well, in sections of their home. So again, product samples. Cassandra's asking a really good question. What about equipment for use for your business? Would that count? Like, yes. So just think about this. Anything and everything that is directly attached to your business, if it is occupying space, go and measure the space it's occupying, take a picture of it, and document the hell out of it. So I can't really get up and show you guys at this moment, but if I could, you would see that there is I took a piece of tape, and I actually taped one wall to the next where I'm taking up space in my office right now, because technically I have a different arrangement. I'm just going to put it that way, and that's part of a tax strategy for some of you out there, but I'm just saying. So I have a piece of tape, and I've measured it, and that's how much square footage that my office is currently taking up, including the O-ring light that's on right now, including the recording studio stuff that's in here. So yes, to answer your question, Cassandra, it's where it's regularly taking up space. So again, in my example, like regularly taking a poop, the same idea. If you're constantly putting it in the same space all the time, I would argue and say that you may have a deduction. Now, what it wants us to do is it wants us to calculate the square footage of the home. So I'm going to make this real simple for us for calculation purposes. So I'm going to say that the space of the home office takes up 100 square feet. Average bedrooms are about 144, but I'm going to use this for calculation purposes. Fatima Parker. Okay, so essentially, what we're doing is we're taking 100 square feet of my office that it occupies on a regular basis. Okay, and my total square footage of my house is 1,000 square feet. So I'm gonna make this simple. I'm gonna say the total square footage of my house is 1,000 square feet. That's the total for the house. Okay, now here's the dealio milio, and here's a catch, and here's a loophole, and another tax tip, and just the tip. So listen. If you are in an industry that is requiring you to store shit in your garage, I'm talking to my realtors potentially, and you're storing your signage in there because you don't want the neighborhood kids or the vandals to come and take it. If you're storing, big boxes of inventory because you don't want it stinking up your house, so you put it in your garage. Guess what? The square footage in the garage will be counted. But here's what you have to do. You have to include the square footage of the total garage. That's my free tax strategy tip for you, just saying. Again, this is what I do secretly behind the scenes with my clients when we put together tax strategies. So I'm going to have 100 square feet dedicated to my office. I'm going to have 1,000 square foot casita. And what that means is that when I follow the instructions and I divide 100 by 1,000, who out there are quick typers? What's 100 divided by 1,000? I should get a percentage. I'll wait for you to submit your answers before I submit mine. I can do this one in my head. This one's pretty simple. 100,000 divided by 1,000 square feet is how much percentage? So I'll wait. Let's see if anyone's out there listening and participating. Pull out your calculators if you have to. No shame in your game. What is it? There we go. Cassandra answers first. Cassandra, you get a luckily naked tax talk point. So what it is, it's 10%, right? And by the way, just a quick little thing, if I may, if you calculate it and you get a 0.10, essentially you're equating that to 10%. So this percentage point moves over 2 spots because 100%, and then that creates 10%. So Cassandra, you were right. You divided it correctly when you put it in the calculator. So good job. So I'm going to get 10%. Okay. Now, why this is important is because now 10% of all of my home related expenses to house my business will become a deductible expense on my tax return as a Schedule C filer. Okay. That was what's going to happen with you. So you're going to get 10%. Now, I'm going to bypass the daycare stuff because, again, I'm not necessarily talking about my daycarers, although if you'd like some more information, let's get naked at nakedtaxtalk.com. So, again, if you're a daycare earner, you'd like me to help you calculate this, let's get naked at nakedtaxtalk.com. But otherwise, if you're not, I'm going to scroll on down, and here's where you're going to see some interesting things. So, what we're going to do is this is a very complicated schedule, honestly, on its own right. But I'm gonna try to keep it as simplified as I possibly can. Okay, so for my experts out there, just follow along. Just know that I'm not giving them the full enchilada. I'm doing it for simplification purposes. Okay, so and I'm going somewhere with this, I promise. So you get 10% as a deduction that's allocated to your business. Now, if you notice on the form, you've got this thing called direct expenses and indirect expenses. Now, what that means is that direct means that if I shoot a missile at the if I shoot a missile at the bullseye and I hit it right on the bullseye, that's a direct hit, right? It's direct. Versus if I shoot at a target and I hit it like over there, it's kind of indirect. Okay. So why that's important is because, believe it or not, with the right documentation, the right tax plan, the right tax strategy, you could be opening up yourself to direct expenses, which has a different taxable outcome, versus if we go with an indirect, which has a very different outcome for a tax deduction. Okay. So I just want to point that out. So again, with really good tax planning, really good tax strategies, you could very well end up on this column A versus column B. I'm just saying, this is what we do as tax planners. Okay, so I'm going to erase that because I want to simplify this for us. So I'm going to pretend like we're all on the column B, okay, indirect expenses, because majority of us taxpayers as solopreneurs filing a Schedule C on a 1040, okay, we will probably be on a column B because it's easier and because that's what some taxware software does. And sometimes, quite honestly, that's all you can do. So if you notice, it says casualty losses. Listen, I'm not going to talk about that right now. The next one is, it says deductible mortgage interest. Do you remember I said earlier, about like 12, 15 minutes ago, that they're going to want to verify the mortgage interest that you deducted on your Schedule C? We finally have arrived, my friends, but I had to get you to the percentage. So the deductible mortgage interest is going to come from a form called the 1098 INT. That's the form number, 1098 INT. And what that form signifies is that I, the consumer, paid interest to somebody, in this case, the mortgage company, and the mortgage company has an obligation to report the amount of interest received from a recipient, aka me, the home buyer. So they issue this form called the 1098. So the 1098, let's say the 1098 is $10,000. So I'm going to put $10,000 because that's how much I paid in interest through the year. Next, I'm going to have real estate taxes. And again, this is again supposed to be for PPP, for the forgiveness portion, but why not? We're here. So let's say, you know what? Let's pretend we're doing this for PPP. So I'm going to pretend like we don't have real estate taxes. But if you did, Okay. If you did this, you'd put the number here for real estate taxes. And then if you notice, it's going to have you multiply, do some numbering. And then it's going to say, oh, did you overpay interest on some stuff for mortgage? Or did you pay excess in real estate taxes? You don't see this very often. I see this primarily in larger operations. So we're going to just pretend that doesn't exist for this purpose of demonstration. And notice you have homeowners insurance, or if you're a renter, renter's insurance. If I'm a renter, I don't have mortgage insurance. I pay rent. That's where I'm going to put rent down. If I have to pay for repairs and maintenance, let's talk about that. If I have my office based out of my home, Uncle Sam understands that he doesn't want clients coming to a junky house, okay? He doesn't want them driving up to a house that has bushes that are overgrown, lawn that hasn't been cut, trees that haven't been trimmed. It looks like the house that's scary in To Kill a Mockingbird, where all the kids reference it as the scary house because it was overgrown. He does not want you as a business owner to look stupid, okay? He wants you to have a house that looks bomb ass. And so what that means is he wants you to hire people, believe it or not, because he understands that your time is more valuable doing what you do best, not trimming your yards. And he encourages us to hire people to come out and trim my lawns, cut my bushes, trim my trees, work with my installation of my irrigation, blah, blah, blah. And if I have a pool, same thing. I might take clients back there, or maybe the client has a side entrance that comes from the backyard. Again, he doesn't want to see your pool green, okay? He wants to see it clean, crisp, and clear. He wants your backyard to look like an oasis because the client is judging you. Let's be real. People judge each other 24/7, and he does not want the client to judge you. So he wants you to pay for the people to come out to make your place look amazing. Now, hogs get slaughtered, pigs get fed. And so he says, I still want you to put down how much you paid these people. But the catch is I'm going to limit your ass to the percentage of the home office square footage, okay? So again, for demonstrations for this, I'm only mentioning really mortgage interest for our calculation for the forgiveness portion, okay? Because that's what we were instructed. Now, the next thing, you got utilities. Oh, say what? Yes, it's freaking hot right now here in Phoenix. So I got the AC blasted down to 76 degrees because I'm freaking hot with all the lighting on. I have all the lights on to put on the show. I've got electricity. I've got gas. I have a gas furnace. I have a barbecue pit out there. I've got cable that I have to use. I have internet. I have a home phone. I have a whole bunch of other things that I provide for my house. And again, Uncle Sam says, well, like your business is occupying your home and it's using your electricity and your gas and your cable and your internet. And so I don't know why someone put a sad face, but that's okay. But essentially it wants to reward you for that. And so the utilities portion of it also becomes deductible to you. And believe it or not, I just remembered the regulations say that they're going to also want proof of your utilities. So we are actually going to want to track our utilities. So again, we're going to put the number here. So for purposes of demonstration, I'm going to say that our utilities is another $10,000. I do this on purpose, and those of you who are math teachers out there will get it because it's easier to teach math when you use tens. So anyway, so you've got utilities of $10,000, and then you might have other miscellaneous expenses. And then finally, what we do is we add it all up together. So we add it all up together and I get $20,000, okay? And then I turn around and I multiply this number times this guy. So I'm left with $2,000. 20,000 times 10,000 is 2,000, okay? So I get $2,000, and then it does something called there's some limitations that apply, but for demonstrations of this, we're going to go with $2,000. So this $2,000 number is essentially what becomes part of two things. It becomes part of the forgiveness portion of the loan, and it becomes part of your deduction on your Schedule C. So remember, the rule says that what they're saying is that you've got to prove to them 8 weeks worth of your mortgage interest and that you deduct on a Schedule C, and we'll talk about that in a minute. And then any utility payments that you also took on your Schedule C. So I'll talk about rent in just a minute, but this is strictly for mortgage interest and for utilities. So remember that number, it was $2,000. So I'm going to put that number right here. So I've got $2,000 now that, ironically enough, reduces this number. But remember, this is 2020. I know we shifted gears without telling you, but we're pretending like we're in 2020. So this number theoretically reduces this number. It drops it down to $98,000. And then that's what becomes subjected to self-employment tax at a rate of 15.3%. Anyways, so the thing about it is that if my forgivable portion is $15,000, that's the max portion that's forgivable, 15,384, I know that I definitely am hitting that $2,000 threshold that's going to become forgivable. So with that in mind, let me see, make sure. By the way, I forgot to tell you this, that the limiter amount, the loan limits, is $100,000 divided by 12. That's when we get to the 2.5. Yep, I got that. Okay, good. I was checking. Oh no, we're doing the forgiveness portion. Okay, 15,385. Well, we're slightly off. Divided by 100,000 plus 500. Okay, so this complication gets even crazier, because now I have to take my interest, my rent, my utilities, and cannot exceed the total amount of the qualifying loan forgiveness portion. And I just realized something, that I have to back into this calculation. Oopsies. But essentially, we're going to do 100,000, 52, 193 times 8 is 15,384, 2,000. And how do we get to this number? Uh-oh, SpaghettiOs. JB did something. Okay, so essentially what we're saying is that the 15,384 is minimum. There we go. 1583 is a minimum of the forgivable portion. And then I can include on top of that my mortgage interest and my utilities that I deduct on Schedule C, which we just calculated. So that's another $2,000. And the next thing I can do now, again, if I don't own a home, but I'm renting, okay, so I'm renting an apartment, for example, instead of using mortgage interest, I can use the rent calculations instead. And in the example of the 8829, again, I can have rent here. So we would just swap out the 10,000 interest and put it here for rent. Let's just stick with the same $2,000. And so now we are back to the point of it being forgivable, which will be the 15,384 plus the $2,000. So in this example, this is what we're doing. Okay. Now, here's the thing. There's a limiter, and the limiter, the maximum value that you can deduct, is up to $100,000 divided by the 52 times 8, which gives us the 15,384. That's the maximum amount that will be forgiven. And then we're going to add in the rent and utilities and or mortgage interest and utilities that we paid. This is important because when you file your 2020 return, I suspect they're going to look at this schedule to determine if, in fact, that portion is completely forgivable. To answer, Cassandra, you asked it earlier, you can use the loan portions for payroll. Again, if you're paying somebody that's not a 1099er. That is essentially how we deal with and understand what is our total amount of money that we can get from the PPP program. And it also tells us what the maximum value is in terms of the forgiveness portion, which is the 15,384 plus whatever we deduct on mortgage interest and or mortgage interest, utilities, and potentially payroll if you have employees. By the way, there's a little unknown tax strategy about employees. And if you'd like to know more, let's get naked at nakedtaxtalk.com, and we can talk about explaining some of that stuff. So, okay, anywho's blues. Did I lose anybody? Did I confuse anybody? Or did you guys find this valuable? If you found this valuable, I would love for you to comment on this video. If you found it confusing, I know I confused myself there for a couple of seconds. I get it. You saw it in real time. Can you imagine me, the expert, getting confused? I can only imagine when we are working with this as entrepreneurs. Can you only imagine? So if you found this valuable, I'd love your feedback on it. I want to let you guys know that I'm in the process of developing a program where I would like to offer this type of services, in the sense that I would love to educate my self-employed individuals out there on how to maximize their deductions, the right things they can do in their business, the right way to structure it, when to structure it, and how to structure it. And I'm doing this, I'm doing right now the research for it, so it's not 100% complete. And if you would like to volunteer to spend about 20 minutes with me to help me give me some research so I can provide the best and most amazing program, not only for you, but for many others, I would love it if, again, if you'd leave me a comment, let me know you're interested. And please, you can find me on Facebook. You can send me a private message with your email address and we can connect there. I've had already today 6 people that volunteered. And by the way, I am giving away an extremely high quality gift in exchange for your time to spend 20 minutes with me. It's being gifted to me by my client, Cutesy of Cutesy, Q''TSIE.com. And I'm giving this away to you as well. So I'm asking, if you know anybody who's a business owner, I would love to speak primarily to women entrepreneurs or LGBT-owned business owners so that I can develop the research so that I can provide high-quality access. And again, this is my teaching style, so you guys got a little bit of a flavor for it. You guys got to see how I will walk you through forms like this and many more other goodies. So with that, this is what we now are looking at. To sum all this up, is that I'm an independent contractor if nobody can control me, and I get issued a 1099. I am a Schedule C filer, filing on a 1040 individual return. Today's video was for you. And we also were able to calculate what was your maximum value. By the way, most banks have a calculator that do this for you automatically, so you don't have to manually do it. And now you're also aware of what is your maximum forgivable portion of the loan. So with that in mind, if there's anything that I left out, any limitations, etc., again, we understand that I'm just giving you an educational moment. I don't hold any guarantees about this, and nor do I promise any results one way or another. This was strictly for education. And again, if you'd like some solid advice, then contact me. Contact me directly at Let's Get Naked at nakedtaxtalk.com. I am actually opening up my sponsor. So my sponsor is JB Financial. That's my other company that sponsors Naked Tax Talk. So I'd like to give a big shout out to my company, JB Financial, for putting up the funds so that I can do this for you guys. So info at jbfinancialllc.com and or Let's Get Naked at nakedtaxtalk.com. And Cassandra, yes, if you'd like to share this, this has been made public to the world. And again, I hold no guarantees. I make no accuracies about this. I'm just giving away information that as I'm seeing it, and I'm just relaying it in real time. So yeah, absolutely. Send them to my link. If you guys are watching this on YouTube or you share this through YouTube and you share the link on YouTube, I'm asking you that you hit the subscribe button. I'm trying to get to 100 subscribers. So if you found this valuable, the best thing you could do for me is to hit the like button, either on my Naked Tax Talk show on Facebook or on my YouTube channel, Naked Tax Talk. Hit the subscribe button and do not forget to hit the alert button, because I am trying to bring episodes every week on Wednesdays, and I'm trying to sneak in like bonus episodes on Thursdays. Last but not least, tomorrow I'm interviewing a woman who owns a dog training company and a dog something else company, and she's going to ask me questions. It's a reverse interview, and she's going to ask me some questions about the different entity types, when we should do it, et cetera, et cetera. It should be a very informational interview as well. And naturally, I will be using my sex and entities talk tomorrow, because that's my core talk about explaining sex and entities. And although I didn't use a whole lot of innuendos today, I just want us to be remembered that we don't want to get caught with our pants down. And no, PPP is not a water sport. And no, you cannot take a pill to fix your EIDL issues. So with that being said, I thank everybody who stayed on and watched this episode. I thank you if you watched this post-production. And yes, Cassandra, and yes, anybody else out there, if you'd like to share this for informational purposes only, please knock yourselves out. I would love it. I think it would be an amazing gesture. And to every single one of you who watch me faithfully, I say thank you and adieu. Have a great evening, a great morning, or whenever it is that you watch my episode.